Hello, welcome to the Breakthrough Hiring Show. I'm your host, James Mackey. Very excited for today's episode. We are joined by Doug Landis. Doug, what's going on?
What's up, James? Nice to see you, my man.
It's good to see you too. This is great. This is going to be round two for us.
Yeah, indeed. Well, I guess we got a lot to talk about.
Yeah,
or better put, we got a lot to say.
Yeah, we got a lot to say. We'll see if people like it. Would you mind sharing your background and experience with everybody, please?
Yeah, totally. So I'm a growth partner at Emergence Capital. We're a B2B focused SaaS venture firm. We focus in early stage, so Series A is our sweet spot. We made a bet 20 years ago that all software was going to move to the cloud. I think that was a pretty good bet. With bets on Salesforce and Box and Viva and Yammer and Steelbrick and SuccessFactors and Zoom and Bill.com. And I mean, we've done okay. Firm, my role is interesting and amazing in the fact that I sit on our investment committee and I help us to source deals and do due diligence in deals. But more specifically, I help our companies figure out how they're going to scale and grow from $500,000 to $1 million in ARR to 10 to 30 to 60 to 100 and beyond. And if you want to kind of break down my world into a couple buckets, one is clearly a lot of one-on-ones with our portfolio executives, whether that's CEOs, heads of sales, heads of marketing, heads of CS, to help them not only just think through their strategy, but just really break it down and kind of and hone in on how we're going to execute against the strategy. How are we going to go from 4 to 12, which arguably is one of the most difficult tranches to get over. But beyond that, a lot of it, you could argue probably 30% of my time is on hiring. And interestingly enough, and I got to say, getting involved in Emergence almost 7 years ago, I actually I always knew hiring was important and difficult, but holy smokes, in the role that I'm in now, when we invest in a Series A stage company, and it's almost one of the very first things we have to discuss is okay, what critical hires do you need to make? And we can usually tell when we're talking to founders, and as they start to kind of map out who's in the team, we're like, okay, we kind of know where the gaps are. We know, arguably what you need. Finding the right person with the right skill set for that company at that stage, regardless of industry, is tough. It's tough. 2 years ago, it was hard because there were not enough people on the market. Right, the people that we really wanted, we'd have to go out and find. We'd have to go out and do some real digging. Now, the flip side is there are a ton of people on the market. So now we got to filter through all this noise. And we're like, okay, who's really good that's on the market that maybe, their company that they were at just took a wrong turn. So
yeah, there's all sorts of weird issues
is so
right now.
critical. Yeah, it is. It's bizarre. It's super bizarre.
Well, I think it's it's as you said, you're filtering through noise, but the other couple of issues too is that if somebody has job stability in their current role in the tech market, they're less likely to accept because
risk tolerance has changed.
So that's a problem. The other thing in tech is that a lot of the times people jump to a new job because of a big salary, a potential for a big salary increase, and salaries have stagnated, so there isn't that incentive to move either. And then the third thing is that there are people who are like, well, there's more good people off the market. It's well, yeah, but if you're looking at particularly director level and up, these folks, when they got laid off, got huge severances and they're taking their time. A lot of them are just saying, I'm just going to stay out of the market for the next 6 months and ride this out until there's more opportunities. So there's just so many combinations of factors that, I mean, overall, I honestly, I think it is a little easier to recruit in this market. Sometimes I'll see an agency recruiter CEO do a post oh, it's just as hard. I'm like, no, it's not, man. It's not. It's still hard.
A different client. It's a different level of difficulty. Here's
right.
for us, what's really interesting is, we're doing way more back channeling because the people that are on the market that happen to be available, maybe they left their last company, maybe they got let go and part of a riff, what have you. Yeah. It's we want to understand more, because the truth is, in this environment right now, we're super focused on, capital efficiency. We're focused on unit economics, profitability, et cetera, where before is growth at all costs. We can't get a hire wrong because the financial impact in the business, right? And we know that what we're struggling with right now at this stage in our companies is different than what we were struggling before. When it's super frothy, you're like, okay, we need somebody to push and scale, scale, scale. Now we need somebody who's actually really smart and understands how to grow, with good kind of core fundamentals in mind. And here's the crazy thing. It's also, let's just consider this, 14 years of frothiness. All of those so many of those sales leaders or even go-to-market leaders over the last 14 years have never seen anything like this. And this is the time where like the real gritty, sales leaders come out. And those are the people that I want to hang out with, because it's like, all right, how do we readjust? And that may mean we got to readjust who we target and why. It may mean we reorient our messaging to our buyer personas. It means changing our pricing and packaging, meaning it changes some aspect of our product, because we got to pivot a little bit because our target customers that were our target customers a year ago have like shifted. And so like, I want a leader that knows how to think through those elements of the business. I want a leader that understands how to build a business based on solid fundamentals versus someone who's just used to like grow, hire, grow, right? So it's a kind of a different profile now if you think about it.
Yeah,
So
sure.
to me, it's difficult in that regard.
Yeah.
Just because it's a slightly different profile versus we got,
Yeah, particularly at the leadership
noise.
level. At the leadership level, it's
Absolutely.
yeah, it's just
Absolutely.
so challenging. I think one of the things that's really challenging for leaders right now is we need to be adaptable, but we need to be adaptable in smart ways when it comes to our value propositions, our product roadmaps or services, how we're positioning, pricing and everything else. And there's so many intricacies when it comes to, well, what are existing customers? How are we packaging to them? How are we pricing to them? What can we reasonably do to adjust potentially pricing moving forward, or how we position the product moving forward? It's and then of course, like how all of those things can impact your unit economics, and there's just a lot of things that you have to anticipate, and at the same time you have to move quickly if you want to make sure that your win rates don't plummet, or you're losing more deals to your competitors because they adjusted faster. And so there's just a lot to think about. And having experience I feel like has never mattered more. Like this is, sometimes I feel like maybe more in a growth market, maybe it's just a little bit different of a profile where you can say, okay, find somebody who's just really good at these one or two things, right? And then we don't really care if the other things aren't quite as good. Whereas now it's like being well-rounded and being like good at critical thinking, good at logic, analytical, and being able to quickly come to logic or reason-based decisions that are going to allow you to make decisions fast enough to try to survive or ideally thrive in this market. It's a lot more complicated as a leader these days. It's a lot harder.
Just think about this. A healthy pipeline solves all problems. Right? Like as a sales leader, you got a healthy pipeline, like you don't really even need to be that good. You just need to be solid, right? But guess what? Pipeline right now down for everybody. Net new logo pipeline is down for everybody. Most everybody's thinking like my growth is going to come. I'm going to hit my numbers based on my expansion, upsell existing customers, keeping them happy, not losing them. Pushing my my net dollar retention numbers up. So like with an unhealthy or difficult pipeline, that's where you really start to see people's skill sets. Like what can you do as a sales leader to, one, make the business more efficient, two, focus on on really targeted tactical outbound. What does that look like? It's no longer, forget about these old phrases of personalization at scale. No, it is like, I'm reaching out to you, James, specifically, and I'm not stopping until I get the right timing and relevant message to you. And at a minimum, even if you say no, I'm like, all right, at least I got an answer. And it's that grittiness that really exists in leadership today. Interesting question that I ask a prospective sales leader right now is like, okay, how are you going to calculate cost of sale? Walk me through that right now. I don't want you like this is the stuff you need to know, because here's the thing: when you join an organization, or if you're in an organization right now, you need to understand how much it costs you to land every single customer, not only from the fully loaded cost of SDR, AE, SE if you have them, but also the support costs. And if you don't understand that, then you don't really understand the margin that you get to play with in terms of your discount rates and whether or not this customer is potentially going to be a profitable or unprofitable customer for you.
Yeah.
Because again, if we're getting back to fundamentals and unit economics, that stuff matters.
Yeah.
When it's really frothy, you're not thinking about those things. You're just thinking about growth.
You don't. And then, but in my business, it's like bootstrapped organization on the services side, right? For those tuning in, it's SecureVision contract recruiting and better recruiting RPO. For us, it's like, as initially bootstrapped, we always have to be thinking about the unit economics because there's no investment capital or cash flow. And so it kind of forces us to grow sustainably. But one of the things that has been incredibly difficult is our like CAC to LTV, customer acquisition cost to lifetime customer value. Those metrics are getting so skewed that there are channels where literally the cost has increased to the point where it doesn't make sense for us to pursue those. Because like the lifetime value is going down. People don't have to hire as much. Our contract length and price is going down. And at the same time, the cost of acquiring customers is going up. And then it's like, okay, well, even if we acquire this customer, we're going to lose money or we're going to break even. And if we have a break even contract, that means that we're taking time that we could be spending on profitable customers. On break even contracts. And it's like, no.
But that's the way that right now, that's the way go-to-market leaders need to be thinking, right? They need to be evaluating the customers that they're going after, because the reality is it may cause them to shift. Like, we've been going after these market segments, and to be honest, as you unpack it and you look at the numbers and the data, we really shouldn't be, because it's over the long run, our lifetime value of that customer is actually significantly lower than what it needs to be in order to cover our costs for these hires that we need to make internally.
It's pretty wild. I think, I don't know. What are your thoughts on the market right now? I guess this is like speculation, so we don't have to spend too much time here, but we recently had Sam Jacobs on at Pavilion, and he was saying, potentially another 9 months of this stuff is kind of what he thinks. I mean, what do you think?
I think so. I mean, look, until interest rates start to come back and until they start to come back down, things are going to be tough, right? Because access to cash and capital is going to be hard. And to be honest, I believe in the last half of this year, we're going to see a lot of startups just get decimated. Because look, a year and a half ago, we were all telling everybody, the message to all of our startups, to all of our founders is like, don't run out of cash. You got to have 12, 18 months of runway in the bank. Guess what? We're already at that 12 to 18 month window for a lot of these companies. And going out and raising additional money right now with depressed valuations or down rounds is becoming exceptionally difficult. And so if you don't have enough cash in the bank and you've got to go out and raise money right now, and you can't go out and raise, or you're raising at terrible valuations, or existing investors are frustrated and annoyed. And the new investors, they're basically betting on a long play, which isn't terrible. But the reality is there can be a lot of companies that just can't raise. And so they're not going to be able to raise, and so they're going to go under. And I think we're going to see a lot more of that over the next 6 months, because interest rates, I'm not an economist. I listen, I hear. I don't think they're coming down, at least through the rest of this year. I think we got a couple more. We still got to stabilize. I think we got a couple more blips, which just means, again, getting access to cash is going to be really difficult. Hence the reason why we need to get back to fundamentals and profitability and more profitable customers, because if you need to set yourself up to where you don't need to go out and raise capital right now, because it's going to be really painful for everybody. Everyone's losing a ton of value, and it's not going to, what I worry about is so things start to pick up at the beginning of next year. And next thing you know, the market takes off, and all of a sudden we find ourselves in this situation again, 2 years down the road. I don't think that's going to happen, but there's definitely, I feel like people are really, really hungry to kind of get back to the frothy times, but there's just some global kind of economic situations that are going to keep us depressed for at least another 6 months. I think it's kind of the beginning quarter of next year, springtime, if you will.
I'd love to get your thoughts too on just compensation strategy, as how that plays into the greater economy, and honestly, the growth strategy or sustainability strategy of organizations. I mean, do you have any, just high level, do you have any thoughts of like compensation in this market?
Well, unfortunately, a comp is kind of one of those things where, it once it goes up, it's not going to come back down to where it was before. It's just, once it's up there, it's up there. It's kind of, So you said it earlier, it's stabilized. Like it's not going up from where it was 6 months ago or even 12 months ago. People are not getting more comp. There are comp adjustments that are being made. There are more stronger adjustments being made if you are in a hybrid environment and you're living in Washington D.C. or Tennessee, as an example. We're going to make there are comp adjustments being made for those markets and those market rates. Again, when it's really frothy, those things tend to not be as critically important. But right now, everyone's trying to manage, their burn and what they feel is appropriate. And so it's getting a lot more, comp is getting a lot more scrutinized right now. I could see companies kind of being a little tighter, even with base and variable if you take a rep, but maybe once they get to 100% of their number, then there's more upside. Like, to me, that's a safer play. It's like, cool, I'm going to make this from a cash perspective. Overall, maybe your OTE is less than what it used to be, but once you get to 100%, I'll give you faster accelerators, right? So that, because I really want you to get to 100% because we've been struggling. Like, the unfortunate thing right now is, while we have all these comp ranges, if you think about it collectively, people aren't hitting their numbers. They're just not. Attainment numbers, whereas before I think they were in the kind of mid 50s, maybe low 60s, they're probably down in the 30s and 40s right now. And so, look, whatever your comp package is, if you're not hitting your number, you're not getting your full OTE. So it's kind of a lose-lose for everybody. So if you're in a well-paying job right now, and you're able to close deals and you're getting close to hitting your number, and there's still market opportunity in this company, and they can, they're going to be around for at least another 12 to 24 months, don't go anywhere. Like, it's kind of bonkers, because if you go somewhere, the likelihood is you're going to get paid less. There may be more upside, but the likelihood is you're going to get paid less. What do you see? I
mean, I don't see, for most roles, right, we're not seeing base salaries decrease, but I think a lot of folks don't think about this, is that you don't need salaries to decrease for salaries to return to a healthy mean in the market because of high inflation, right? Like, if a salary, 100K salary stays the same, we have a 7% inflation rate, right? So as long as, over time pricing increases, salaries will probably stagnate a little bit longer. We're going to return to this balance where it doesn't screw up our margins quite as much. But yeah, so I mean, I think that's like, it right sizes itself. That's why it's like, when sometimes CEOs will ask me, like, whether it was the CEO event down in Miami that we had, where we actually met in person for the first time.
Yeah, totally.
I just remind them, I'm like, look, you don't have to artificially try to figure this out. The market's just going to guide this. The salaries are going to right size. They're going to return to a mean. They're not going to just infinitely go up. That's just not, just like how growth doesn't infinitely go up in a market cycle. It's the same with salaries. So it's not something that I'm overly concerned about, but I do get concerned, I guess, when there's too much emphasis on trying to lower compensation. I'm also a advocate typically for, and there's probably some people that oppose this. I'm an advocate of doing deeper cuts and not decreasing salaries. There's some organizations that
that's interesting.
lower salaries and keep on the full staff, because my perspective is, I'd rather keep my top players, like, limit their anxiety as much as possible. I don't want my A players stressed about if they can pay for groceries. I want them focused about stressing about, are they going to be able to retain my customer? And so I would rather cut deeper and maintain a quality of life for my core people. And also, they're fighting inflation. So it's just like, for me, and believe it or not, I am a huge proponent of a people first culture. But the way that I see it is that if I cannot make the right analytical decisions in the short term, then nobody has job stability. So I'm not saying there aren't exceptions. I know there are exceptions, but I think as a general rule of thumb, I think that that's an important strategy that more times than not is going to serve a company well, personally.
Yeah. I mean, it's totally up to the CEO and the board and kind of their philosophy, because the counter to that is, well, I don't want to do layoffs, right? Because I want everyone to, I want everyone to feel safe and secure. And so in order to do that, our executive team needs to take a little bit of haircut. So that
Okay. Yeah. I mean,
there's
there's
a
that
counter to
balance.
that.
Like, I think it's like on an executive level, like you can show that everybody is sharing the impact of
Right.
the economy. I think that's a little
Yeah.
different. But if I'm looking at an individual contributor level,
Yeah.
like I think that,
So I agree.
a better way to operate a people first culture to preserve the culture and help people feel safe is when you do the layoffs, have a good exit plan in place for the folks that are affected,
Yeah.
helping them land new jobs, like through the network, putting together services for them. If you're financially able to, providing severances, if you feel like you're able to do decent good severances, do that. Because a lot of companies, I don't think necessarily think about this, but your severance package and your exit package that you provide is just as much for the people who stay as for the people that leave, because the people who stay want to know that if something were to happen again, how you treated those folks. Not only were they friends with those folks, but
Yeah, totally.
what financial situation are they
Yep.
going to be in? Are they going to be able to land on their feet, or are they just going to be out
Yep.
in the cold?
Yep. It's good. It's good. It's good for morale. I was talking to one of our CEOs the other day. They had to do a riff, and it was really interesting. He took a pretty progressive approach to it. He let everybody know a month in advance that this was
Mhm.
coming, and he let everybody know the process in which they were making these decisions. And arguably, so like there was basically, and they were giving people, and then during that month, they also gave people, if you want to opt out, you are welcome to opt out yourself. Right?
Yeah, if
The
you want
people
to
who
leave sooner.
actually, yeah, the people who ended up opting out and taking the package because they put together a package for everybody and they shared, what the package was going to be. The people who opt out were already likely going to be chopped anyway. But what it basically did is it preempted all of the nervousness and the chatter around layoffs and this, that, and the other. And they were very transparent about what was going on. And then when it happened, everyone's like, okay, we've been expecting this. It's happened. We gave people the chance to opt out. So basically, those of you that are sticking around, that we've chosen to stick around, and you've chosen to stick around because it's a two-sided, conversation here. We're all in, and it's time to go now. On Monday, it's go time.
Yeah.
And so, like, the amount of buy-in that he had from everybody that stuck around, and the people that are still there was super impressive. Like they didn't
Yeah.
skip a beat.
Well, it's just like so important. Like transparency is so important. Like whatever your strategy is, being transparent about the company's financial situation, the strategy in a down
Yep.
market. How are you? We actually have a really good episode coming out on the show too, that we also dive into this more. But I think it's just like the whole transparency factor is just critical. And then again, it's like, being thoughtful from the people perspective, and trying to provide as many resources within the ability of what's financially sustainable given your
Yep.
situation, of
Yep.
course. But yeah, I mean, I could see that working for your CEO friend. I mean, it's I've definitely tried to do that as well. One of the things that's tricky is there was like so much instability. It was like, we think this is, probably 2 months out. This is what we're seeing. This is what we have to do to prevent it. Of course, we're doing everything we can. And so it was like, for us, it was like harder
but
to.
you kind of but you can anticipate it. And so instead of like the
Yeah.
we think, it's just like, no, we're going to. We're going to, right? So like
Yeah.
be definitive, be transparent, make the cuts and move on. And
Well,
unfortunately to go deeper because you don't want to have to come back and do it again.
yeah. I mean, I think
And
for us
also,
is. Oh, go ahead.
no, I was gonna say also to be very careful about optics. Many companies that we know out there, very big public companies, get these big riffs and layoffs, and then you hear murmurs about these big bonuses that were paid out. Now, granted, those are bonuses that were already set in place based on specific milestones. They were already there. They've already been there for 9 months, or at least the last 7 months of this year. But optically, you're like, just hold off on the bonuses. Tell everybody that's going to get a bonus, be like, we're going to hold off. You're still going to get it, but we want to be mindful of the optics of this because we're doing it. We just did this big riff.
Yeah.
It matters because people
yeah.
make assumptions and presumptions of the company and the culture based on little things like that. Like word gets out, you're like, really? Is that
Yeah,
cool?
you're
Is that
really
okay?
rolling the dice if you choose to do that in this market. So yeah.
Totally.
Yeah, I hear
Totally.
you
Well,
on that.
we talked about it before. It's like, look, you're the people are the most important part of your business. I was sharing with you before we got started is like, look, in the venture world, the thing that I've come to realize is like, we're not, you know, we're not finance people, we're not technologists. We invest in people at the end of the day, right? So yes, we are in finance, and yes, we are in tech, but at the end of the day, at the core of most venture investors is we're investing in people that we think can change the world. And our bet on you is that we're betting on your ability to go out and hire an amazing team to support you. And if you think about it, that's really what drives, that's the heartbeat of every organization. You've got great leadership that hires other great leaders, and those great leaders know how to lead through all sorts of crazy times.
Right.
You know?
I completely agree. And I actually, it's kind of funny. I recently did a LinkedIn post, and it was, it said, you know, recruiting isn't a segment of your business, it's the core of your business. Nothing great has ever been built without establishing and empowering an amazing group of people.
Yeah.
It was funny because, like, for someone, you know how LinkedIn is, like, for some reason, some people like are offended by any and everything. So I'd get like, they'd be like, no, go to market is, you know, the core, like products, the core. And then I just like respond, like, you can't, my argument, like, you can't fight against it. Cause I'm like, well, who builds go to market?
Totally. People.
Like who builds product?
People.
You know, so like, it's just like, people. And they're like, well, you know, the wire talent acquisition is the first go, recruiters are the first get laid off. I'm like, I'm not talking about the department of talent acquisition.
Yeah, totally.
I'm talking about the core of the business is getting people on board to accomplish the mission.
It's so true. It's so true. One of my colleagues, she runs talent for our firm, Tammy Hahn. It's interesting. She always says, you know, and anytime we onboard a new company, you know, one of the very first questions that's always asked is like, what is your hiring strategy? And oftentimes it is misconstrued like, oh, I have to make these 2 hires. It's like, no, we don't care about those 2 hires. What is your hiring strategy? Meaning, at what point are you, like, we're going to talk you through when you need to hire your own internal recruiter versus using agencies, where they're going to be, how are you going to pay them, how are you going to build culture, what kind of company do you want to build based on the people that you hire? Because if you don't have that at the core of your values, if you're at the core of who you are, then you're just building shit and selling shit. Do you know what I mean? Like, you're not building a company that has staying power, that has purpose. Because you know what? People want purpose. People want to go to work for a place that has purpose. That purpose is built by, you know, the executives and the leaders in the company that care deeply about their people, both internally and externally.
Well, I think too, there's a bit of a disconnect. A lot of times with C-level executives or VCs, they hear this concept of a people first culture, and they think of like all of these culture activities that they have a hard time directly correlating, or they have a hard time seeing the causal relationship between those initiatives and Northstar metrics. And so like, this stuff is not like, no, we're focused on these metrics. We need, but what a people first culture at the core, it really means is that people are the core, and people first initiatives can make a huge significant difference. Like, for instance, the concept of employee lifetime value, the parallel to customer lifetime value. If you can look at a sales team ramp and you're able to cut it from 6 to 3 months to optimize onboarding, you're going to increase their quota. They're going to deliver more revenue. You're going to have more top line growth that's going to compound year over year, which is going to significantly impact evaluation. That is a people function. Onboarding. Yep. That's not, you know, that's not revenue. That's not product. There is a people first culture has a direct impact. If you know where to look and you know what projects to work on, there's a huge impact on the success of the organization. And I think it's like a lot of execs, they don't think of it that way. They're like, we don't have time to work on this culture stuff.
Totally.
You know,
but it also, I think the hard part is people don't know what are all the things that need to exist in a people first culture bucket, right? So some of those things need to be like, well, how do we develop people within the organization to promote them up? What is our strategy for that? What is our strategy for performance plans? And are we really going to follow through with them, or are they just going to be there for, you know, to say that we can check the box? Do we really believe that we can use them to turn people around? What is our benefit strategy? Well, that's a difficult one, right? Because it's like, are you going to have benefits that support all, or support none, or support some? Do you want flexibility in that? Benefits are those weird things that right now a lot of us really care about. It's so like all of these things like fit into this people first culture bucket,
Does,
but I
man.
don't know. Honestly, I don't know. I haven't seen it. If you've seen it, anybody else has seen it, send it to me. But show me the list of all the things that you think need to exist in there that an early stage CEO, and I'm going to say early stage because this is something that literally, if you're at seed stage, or definitely if you're at CEO or Series A CEO, you need to know all of these and have a plan to work on all of these.
Yeah, I mean, I
It-
can help you with that. I
That's
mean, like,
that's the
so
core of it.
I would say too, like I see like what you're saying about a full list, but I think it's like finding what are the highest leverage wins, things that you can implement. And so for me,
Sure.
like when I'm looking at, I mean, I've worked with over 150 startups in the past 8 years, right? So like this is a standard motion. Like I think that the one thing is, let's start with talent acquisition because that's like the beginning of the journey. You need to have a structured hiring process. For those tuning in, if you haven't listened to the episode with
Yep.
Daniel Chait, go back and listen to it. You need to have that in place. Just like we look at the level of sophistication we see in revenue organizations and sales teams, and for whatever reason, we don't see the translation often
Yeah,
into,
totally.
right. So
To
it's
your
like
hiring
you need,
process.
yeah,
Everything from interview to onboarding. Like, how are you going to nurture them if you send out an offer letter, and like, how do you keep them in check if they've got 6 weeks before they start? There's
right.
so
I mean,
many
just
things
like,
you can do.
how do you make sure you're hiring the right person through like structured interviews, scorecards,
Yeah,
custom
totally.
questions?
Yes.
Like,
Yes.
you would never show up to like a discovery call with a customer and like not know what you're going to do on that damn call. Like,
Yep.
and then on interviews, you see like 5 people repeating the same interview. I mean, that's just like one example, but
Oh, it's
you
the
need to,
worst.
tighten up that. I mean, the one thing I would just say on the talent acquisition side, if you do one thing, it's just like tighten up that process really well. The other thing I would say is like from a compensation perspective, target being in the 75th percentile in compensation.
Yeah.
Seriously, like
Good feedback.
on the
Yeah, I
dollar,
agree.
because if
I
you're
totally
in the
agree.
middle, it's not compelling. But here's the thing, you never try to be top of market because there's always going to be somebody who's willing to spend money irresponsibly and
Yep.
get to the top. So you never try to be the top bidder. 75% holistic package, sprinkle in like the
Yep.
mission, particularly if you're early stage. That's how you do it. On the
Yep.
people side, once you onboard, guess what the second thing is? Onboard optimization. Maximize employee lifetime value. Get people ramped faster. Have them turn into value creators quicker. I think that like structured hiring and onboarding
Yep.
is, if you're a founder CEO, early stage, if you get those two things right, there is compounding growth that's just waiting to be had that'll increase your valuation. And so I would just
Yeah, of
say,
course.
do those two things.
But I mean, look, I mean, you could even expand that. One thing that is often misguided or forgotten about is, but by the way, your talent acquisition strategy starts with your website. Well, arguably, it starts with your strategy for, like, who are you? What's your purpose? What do you stand for? What's your mission, vision, values, all that stuff. And then it's like, have a damn website that is meaningful. Have a process that's meaningful, like, because that's the first way in which people are going to, if we don't know who you are, if you're an early stage company, and someone reaches out to James, reaches out to me, and he's like, hey, I've got this company for you. What's the first thing we're going to do? I'm going to go straight to the website. You're like, who are they? What do you do? And so that's like your first opportunity to interact with your talent.
Oh my God. It's so
Website.
funny. So like a couple of years ago, we went through like this big rebrand and we redid the website. And I don't know why, but I guess like just when I had less experience, I was like, it's just a website. Who gives a shit? And so I didn't like invest significant. And then I got this like great graphic designer who updated our brand. And the caliber of talent we were able to hire actually like immediately started to increase. I was like, damn, like we're getting better customers, we're getting better people. I was like, and we didn't even spend that, like, I don't know if I should tell you this, but like our designer, like we straight up, we didn't spend that much money. It was like 5-10 G's. And we had
you don't
like
have to spend a
everything
lot
we
of
need.
money. You just have to show that you care.
Yeah, just
like, and half the time you don't even have anything about like who you are, what you stand for, what kind of culture is that exists in there, what's to be expected if I were to come work there. Is this an always on culture where it's like I literally work 7 days a week, or is this no, we actually truly believe in work-life balance.
Yeah.
But look, of course, we also believe in high IQ and high EQ, right?
Yeah.
We believe in kind of we believe in like core principles, and these are our core principles, and this is what we operate around. It's like, it's just being really thoughtful about that and saying like, okay, this is the way in which we're going to tell everybody like who we are and why you should care and why you should join us. Not just like, look at our growth and look at the market we're serving and look at our great product. It's like, okay, that'll only get you so far.
I think it's like, and this is just the formula for founders tuning in, because I think some of them have a hard time figuring out how to position their company to candidates and really do it in a convincing way. So the way that like you do it, it's a formula and it's simple. So you just say, okay, what is the future that you believe in, right? So that's for the first step. And then you have to discuss, where is the industry today? What is the future you believe in? And why is the founding team well positioned, the founding team and the product well positioned to thrive in that future? Like, if you can just hit those 3 points, you can build on that and talk about values and beliefs, and that's great. That's color to it. But fundamentally, it's just, where's the industry today, right? What's the future you believe in? And why is your team well positioned to thrive in that future? And that goes a long way.
It's a really good foundation.
It's a good foundation
to,
and you got, like, as you said, more color, like you have to talk about, like, there's more stuff to do. But I think if like a lot of founders could just get that little part right,
yeah, totally. By the way, don't forget to talk about who your investors are. Everyone just puts like literally everyone just puts like, oh, their investors logo on there. But guess what? It's the partners in those firms that really matter. Right. It's this firms and what those firms believe in and why there's alignment. Like those things matter. Even at an IC, it's like, if anybody out there is looking to go talk to another company or talk to a company right now, they're in the market. You got to make sure that you're really clear about who their investors are.
Right, I agree.
Because the investors direct the CEO. The investors on the board, they direct the CEO. CEO listens. CEO has to go execute. And by the way, as investors, the only thing we can do is hire and fire the CEO. Right. That's it. We can tell you to go, hey, I don't know if you have the right sales leader in place. You might want to get rid of them, but we can't go do that. You have to go do that. It's your call.
Right. Yeah, I think that's a huge point. I mean, if you can, like, I think one thing that early stage founders also miss is the concept of like the burden of legitimacy falls on the founding team. What I mean by that is that a lot of founders might come from Netflix or Google or a big tech environment, and they're used to an environment that is just constantly attracting amazing people. And I think to some extent, they of course understand it's different recruiting for an early stage company, but they underestimate the difference. And there's a lot of things you have to do to prove legitimacy. It's talking about your investors. It's having a clearly defined interview process, a clearly defined benefits package, a clearly defined 30, 60, 90-day plan. Candidates are going to be so dialed into that stuff because they're uncertain about how young you are as a company. So you really got to have that stuff together to instill that confidence.
It's very true. It is.
Yeah,
indeed.
For sure. And for this topic, everyone, when we're talking about positioning the mission and what I was referring to as like a 3-step process, on another podcast I used to host called Scale by Design, the first episode with Jacob Garlick, partner in a VC, is the one who taught me a lot of those things. So if you're interested, go back and watch that episode on Scale by Design, and you'll hear more of that topic. So Doug,
you got access to all of these. Hey, go listen to this one. Go listen to this one. I got you. We got coverage everywhere.
Hey man, I'm doing these shows now for over a year, and like I said, man, the guest list, your peers that are coming on the show, we got CPO of Stack Overflow coming on, CPO of DocuSign coming on, Daniel Chase coming back on, and a lot of other incredible guests. So it's, we're getting to the point now where we're able to basically point people toward episodes that cover like specific topics, and it's not a whole lot. Like there's of course more nuance we can cover, right? But it's like fundamentally like a lot of the fundamental topics to achieving like success, hiring, retaining, growth. Like we have some content for that, which is pretty cool at this point.
Hey, let's so if we're going to talk about hiring and talent, I want to share some advice on go-to-market hiring. Yes. Early stage go-to-market hiring. If you got CEOs listening to this right now, I will tell you, because we invest in Series A, but we do get involved in some seed deals, some Series B. And I've got some advice for y'all, and it's counterintuitive. Seed stage, your focus needs to be hiring customer success and a head of customer success, CSMs and head of customer success, and maybe support, but your CSMs can cover a lot of ground. Here's why. Our expectation at Series A is you get up to $1 million in revenue, and you, the founder, sold all those deals to get to $1 million in revenue. You didn't go out and hire a head of sales and some AEs. You went out and closed business yourself. Why? Because it's your damn company. You should understand who your target customers are, who your buyer persona is, what the value you deliver. You need to build those relationships. It's so, so critical. And so you need customer success to make sure all those early deals that you're landing and closing are wildly successful. Wildly successful. They get implemented right, they get utilization right, they get value, and you're getting feedback from them directly to you. Super important. Second hire after CS, you're going to go make is someone in marketing. What? Not sales yet. You're going to go hire somebody in marketing. Why? Because you need to start to think about your branding, your positioning, your competitive intel, your pricing and packaging. All of these things you need to do to help you build some level of awareness and maybe trigger off some level of interest, i.e. some level of inbound if possible. Because the truth is when you finally go out and hire salespeople, they need to know that there's some pipeline there. You go to hire full stack AEs and they don't really want to be full stack for very long. And the truth is you're going to hire some junior people as full stack AEs, and you're going to be like, oh, here's a list of target customers we're going after. And you're going to be kind of shooting in the dark. They're going to be, your SDR, BDR, and AE, closer, et cetera, and they're expensive. But if you can go hire a junior marketing person, maybe they're focused on content, maybe they're focused on, they've got a product marketing background, then you're going to get some material insight that can generate some level of awareness. I mean, hopefully you've got some because, maybe you've raised a significant seed round or what have you. You've got some momentum for the target that you're going after, target customer base you're going after. Once you start to build that marketing machine, then you can start to hire some AEs. If you're getting a bunch of inbound because your marketing is actually working, that's okay. Hire an SDR, hire two. But don't ever think like, I got all this inbound, like I got to go hire this whole huge sales team. That's an illusion. Number one, I could hire an SDR and get through all of your inbound in a month. Done. We can filter through it all, and through that, pick out all the little nuggets of gold that we want to go target and tackle. And that's great. You don't need to go hire a whole bunch of SDRs. And also, you don't want to go hire expensive AEs to go do that. The other thing is you got to remember, outbound is tough. It's really tough. And if you're having to do outbound, as an AE who wants to be engaged with customers and closing deals, everybody hates outbound. It's why it's a process, it's a stage in our growth, right? But if you've got some marketing covers, then it makes outbound easier, likely will lead to some inbound. And by the way, you're gonna comp everybody on the go-to-market side, CS, marketing, and sales based on two numbers: top line revenue and net dollar retention. That's it. It's not about leads. It's about, you can focus on conversion rates, but all that leads to closed business and happy customers. So the thinking about your hiring strategy is backwards. CS first, then marketing, then sales. But if you really think about it, if you go out and hire AEs and you go out and hire a head of sales, you're spending a lot of money in areas where you're still fishing, and it's not super efficient. Your cost of sales is going to be really high. And that, by the way, it's gonna make it harder when you go to raise your Series A, and we're looking at your efficiency numbers and your metrics. You're like, why are you spending so much money? What's going on? Oh, you went out and you hired all these salespeople.
I mean, that's the strategy that we're using at SecureVision. We customer success, marketing, sales in that order.
But what's so wild though,
but we had to do it. We're bootstrapped. Like that's like I didn't have money to spend on a big sales team.
Well, and that's the thing, right? And look, if you're a product or engineering founder, if you come from that world, it feels super counterintuitive. You're like, wait a minute, I need salespeople. No, you go sell. You go learn. Put on your, go read Pete Kazanji's book called Founding Sales. There's just learn how to go sell so that you know what it's like, and you'll have way more empathy for your go-to-market team, your go-to-market leaders.
Yeah, it's just like really helpful to actually have a defined process before plugging in people into that process. Like, let's see what's works before we go out and hire a bunch of people. Yeah. Like, let's not figure out what works with a bunch of people on payroll. Let's figure that out first.
Yeah. People. Well, and look, in the beginning, you've got a whole bunch of hypotheses. Like when we're investing, we've got a whole list of what you have to believe in order for this thing to be an iconic company.
Yeah.
And guess what? As a CEO, you've got a bunch of what you have to believe. So, well, when you hire customer success, they're going to help you validate some of those beliefs or those hypotheses because they're talking to your customers. They're getting them implemented. They realize like, oh, there's this security issue that we have a compliance issue here that we haven't addressed that we got to now reprioritize in the product. Otherwise, this whole market segment that we're going after can't convert. Like, didn't know that. Right. And a lot of people think, oh, I did all these customer interviews when I was building out the product. It's like, yeah, customer interviews when you're building out the product is very different when you're going to implement the product. It's totally different.
That's a really good point.
Anyway, that's my 2 cents on go-to-market.
I love it, Doug. I mean, so any parting thoughts through us? I mean, you've already provided so much value. We got another minute or two here. Anything else that you would mention to executives tuning in?
Gosh, I mean, yes, 2 thoughts. One, just remember you're hiring for the short term, not the long term. Meaning the hires that you're making right now, whatever function that you're making, just think about them being around for the next 2 years. Don't think about them being around for the next 5, 6, 10 years. Because the reality is that's pretty unlikely. We just see it over and over again. And that's okay, because what you want to hire for is now. Now in the next year, I'm not hiring for like 3, 4 years from now when everything's back and frothy again. So just be really mindful of that, and it's okay. So this is why you want to kind of anchor on the right hire right now for that function. And I just say, like, just be really thoughtful about the process, because as a candidate, there's nothing worse than getting really excited about a product or a company that you've heard about and you just have a terrible process. You have a terrible experience that actually starts my relationship with you, and you're likely starting off on a bad foot. So just be really, really, really mindful about that process. And arguably, I would say treat everybody with a white glove.
I really great advice. And Doug, this has been a really fun episode. I know a lot of folks tuning in are going to be dropping this into their Slack channels, sharing it with their team, hopefully sharing it on social media. So I appreciate you coming on today.
Of course. Great. It's a fun topic.
Yeah, it was a lot of fun. Well, hey, everyone, thank you so much for tuning in, and we'll talk to you next time. Take care.